So you're going to buy a house. What's the first step? What do you do? Stick around. That's what we're talking about today. Hi, welcome back. My name's Joe Brown. I'm a realtor with Century 21 Lists with BEGGINS in South Tampa. So today I'm beginning a series on buying a house. Now, it only seems fair because I did a series on selling a house. I've got to give equal time. So you're buying a house. What's the first thing you do? Listen, the first thing you do is talk to a mortgage lender and get pre-approved. Well, how do you do that? How long does it take? You are in muck. I have an interview with Dave Donaldson, who is a mortgage banker with VanDyk Mortgage. And I'll put contact information for Dave in the show notes below, okay? Dave is my preferred lender, and he's more than willing to answer questions at any time. So let me work my magic and get to the interview with Dave.
So we're here today with Dave Donaldson. So Dave, just tell us a little bit about yourself, who you're with, and what you do.
I'm a branch manager and loan originator for VanDyk Mortgage. VanDyk Mortgage has been in the lending industry for probably 38 years. I came out of college and went to work through a management training program for one of the banks, stayed with them for about 10 years, and then went into specifically mortgage lending, and I've been doing that for 23 or 4 years. So I've seen different markets, different cycles. I was there during the financial crisis that we had in 08 and 09, experiencing a health crisis that's affecting the financial markets. You know, today, the benefit of these turbulent times for me, my business, my clients, customers, is typically interest rates drop. And that's what we have seen with the most recent situation that we're in, which makes it a great time to buy a house or refinance a house if you already own one.
Right. So Dave, I'm doing a video series now to help buyers who are looking to purchase a home. So first of all, when they purchase a home, does it really matter who they talk to as far as a mortgage lender? I know you want them to talk to you,
yeah,
but does it have to be a bank, mortgage company, mortgage broker, Quicken Loans, whatever?
You know, I'll give you from an interest rate standpoint, it probably doesn't matter who you talk to. We are out here dealing with the public, originating loans. I don't care whether it's Wells Fargo or Chase or mom and pop mortgage company or VanDyk Mortgage. And we get through the process, the underwriting, the funding, the closing, and that paperwork and package goes to Fannie Mae, Freddie Mac, FHA, VA, one of the agencies. And those interest rates come from them on a daily basis. They can go up and down with the market conditions, but everybody's going and getting the same interest rates wherever, depending on what program it is. Now, the difference is the service level that you're going to get. So from a mortgage broker standpoint, you have to go to the mortgage broker. The mortgage broker then goes to one of the banks or lender. So you got an extra layer to go through, an extra step in the process, an extra couple days delay when you're working through that avenue. If you go to the banks or a lender, which VanDyk Mortgage, we're a direct lender for the agencies. We do exactly what the big banks do. All we do is mortgage lending. You now have a direct tie. You're talking to one person who's delivering that to the agencies, Fannie Mae and Freddie Mac. Right now, what I'm seeing, you take somebody, I'm not going to say it, the bigger banks have got such a customer base portfolio amount that they can't get out of their own way right now. It's an assembly line process. You're a number. If you're one of the bigger banks and you close several 100,000 loans a month, and you only, you have a 97% closing ratio. Well, what happened to the 15,000 people that didn't close, that had the moving truck, outside the house? I mean, they don't care. And, even though we're in 38 states, I still consider us a boutique operation because we close several thousand transactions a month. I mean, you're not just a number. And I think that's what the difference is between the bigger banks versus dealing with an actual lender. And then lastly, you have a broker who has to go through somebody, and there's an extra step. I mean, we actually at VanDyk, we're big enough to where we work with mortgage brokers because they're not a lender. They're not funding the loan with their own money. So those are the difference. I think interest rate's going to be the same. Service level is going to be a little bit different.
Okay. That's really good information.
Great.
So we hear different phrases like pre-qualified or pre-approved. What are those differences?
So if you're interested in trying to buy a house, you need to pick up the phone and contact a lender and talk to them, figure out what your situation is. A lot of times you'll walk away from that and you've been pre-qualified. I've talked to you, I've asked about your credit, your income, your job, how much money do you have to put into the house, and we kind of figure out what your situation is. A lot of times we may have that conversation and decide that, well, you need to save X amount of money to buy a house, or you can afford this today, but you're telling me that your wife's finishing college and going to get a job making $40,000 a year. Okay, at that point you can make, you could buy this amount. And sometimes we talk to people and maybe 3 or 6 months down the road when they're ready to buy a house, but you have to have that initial conversation to get the process started. So that's a pre-qualification. And a lot of times I talk to people, I'm like, yeah, you want to go buy a $250,000 house and have a payment that's in the $1,400 range, and you've got this much. I mean, it all works, and that's great. Then we take it to the next step, which is a pre-approval. We actually take an application. We pull credit. You send me your tax returns, pay stubs, bank statements. We do a full underwrite of the file to where we don't have any hiccups that come up. Cash is not good in the business that we work in, as an example. So having $10,000 in a shoebox in the top drawer to buy a house doesn't qualify as a source of the down payment. However, we can get that money put in the bank and it can sit there for 60 days. And now we can make that work. It's been seasoned. So you verify, because sometimes you talk to people and they're like, oh yeah, well, I've got $20,000 to put towards buying a house. Well, then you find out that they plan on taking $10,000 as a cash advance off of a credit card. Well, that doesn't work, but there's ways to get around it. So the pre-qualification is kind of an initial conversation. The approval is actually, I've done an application, I've submitted all the credit docs, and you're approved to go buy that house, so go find it.
But how long does it take for somebody to get pre-approved?
It depends on how fast they want to move on it. We have an online application through a secure website. We have a portal that is secure. They can upload all the documents in. So as an example, it's Friday afternoon. I talk to somebody. They're going to spend time over the weekend. I will review those documents within a couple days, and we'll have a pre-approval by Tuesday afternoon, or Wednesday. We'll even take it a step further if we're concerned about something. A lot of the income is relatively new based on a commission or a bonus or something, to where we'll send it into an underwriter and have them actually give us an underwriting approval, which is we don't do that a lot, but we will if for some reason we have a question about something. Now that can add another week to the process to get through that, but we are able to obtain an automated underwriting approval through Fannie Mae or Freddie Mac and their automated systems, to where if I know that you make $7,000 a month and you have $20,000 in the bank, and I've seen that stuff, then the automated system is going to give you an approval based on that. All the underwriter's doing is verifying that what we put in there is correct. They're the human eyes, but there is a computer automated process to this. You can get into a lot of different situations that you need to go to an underwriter because of the way the income is being used. Somebody that has multiple properties, they're rented, it's depreciation, they're self-employed. You can get complicated and want to get that underwriter involved. But because I've been doing it so long, I would say, 19 out of 20 people that apply, I'm pretty comfortable they're going to qualify based on whatever it is that they have provided.
And so you talked about people uploading bank statements, and so bank statements, maybe pay stubs, but is it for the past month, 2 months, 3 months, a year?
Yeah, I use the 2 and 2 rule. 2 years tax returns, 2 pay stubs, 2 months bank statements.
Okay.
So it's usually 30 days of pay stubs, 60 days of bank statements. And there's a lot of programs that are out there. There's through the Florida Housing Corporation, there's down payment assistance, for people to, that maybe don't have the money saved up yet. They may qualify. It's an income-based number. There's ways of doing loans with a first and a second mortgage to avoid PMI insurance. I mean, again, reaching out and talking to a lender is the first step that you need to make, and then you can figure out where you are today and where you'll be down the road if you needed to fix something. Talking to the lender is the first step.
So let's say a buyer goes through the process and gets pre-approved, and then they find a home in their price range. Is the process on the lending side faster then?
Much quicker. So if it's a Friday afternoon, Joe, if you were to call me and say, hey, I've got this buyer, Sally and Steve, and they just went under contract, can you help them to get a loan? Absolutely, we can. You need to give us 40 days to close because we're just starting the process. I don't even have a file built. I haven't looked at any tax returns. It takes a while to get there. If I've already gone through that pre-approval process, I have a file built. The only thing I may need to get is, hey, an updated bank statement and an updated pay stub or two, because we started this 2 months ago and it took them 2 months to buy a house. And I can immediately start working on getting the compliance disclosures done that allow us to do that. And in that case, we can close in 30 days. We're still closing loans in 30 days. So it does speed up the process. Sometimes that helps with an offer. If you got 2 full price offers sitting out there, one wants to close in 40, 45 days, one wants to close in 30 days, depending on the seller, that may be important to them.
Okay. So even with the pre-approval, you're looking at maybe 30 days.
Yeah, not more than 30 days, but it can be up to 30 days. And that's where we are in the current market.
Right.
With this health crisis that we're in, it's created an opportunity for refinancing. I think there's $7 trillion worth of mortgages out there. About $3.5 trillion probably would benefit by refinancing, in which case they all started picking up the phone and calling lenders at the same time. So appraisers who used to take 8 days are taking 14 days. Title companies with title searches used to take 2 days are taking 4 days. So the whole process is just a little bit bogged down. If we go before the crisis we're in, you could close a loan in 22, 24 days if everything goes perfect. You always say 30 days because, 1 out of 10 is going to have an extra piece of paper that's needed. Right now, I've got a condo that we have the master insurance policy, but they don't have a law and ordinance policy, and they have to get that in place now because it's a Fannie Mae requirement. It basically covers the treasurer stealing the money from the condo association, or there's a tragic fire. We live in South Tampa over on Howard Avenue. The zoning has changed to where you take an apartment complex that has 32 units. Well, the zoning today may only be for 16. So you lose some value when you take 32 owners and put them into 16. And so that policy is now required, and you have to have it. Well, I've got a unit. It's 4 units, and they basically just get together and decide when they need to put on a new roof or whatever. So they weren't aware of it. We've got to get the policy. That takes a couple days. So that's why I always say 30 days in case something comes up. Something certainly can come up in this process. It's a lot.
Right. So I know this question will be time sensitive because in a week or 2 weeks may not matter. But what is the current rate right now?
Well, it's the interest rates can vary depending on, is it a purchase? Is it your primary home, second home, investment property? A 740 credit score is going to have a better interest rate than a 680 credit score. Somebody who's putting 20% down, there's less risk than somebody who's putting 3%, down. So the average rate by the Mortgage Bankers Association last Thursday was 3.15 on the 30-year fixed rate. That's the lowest it's ever been since they started recording rates. And you could borrow $100,000 for $430 a month. So everybody's situation is different, and the rate may be slightly higher or slightly lower. I think that rate was probably the perfect situation, high credit score, 20% down, those type of things. But, rates are low. They're in the low threes, ish, depending on, what your personal situation is.
Great answer. But that brings up another point about points, right? Mm-hmm. So can you talk about points and whether buyers should expect to pay points?
You can get any interest rate you want depending on how much money you want to spend to get that interest rate, which is what points are. Discount points are used to buy the interest rate down. So we have a borrower who is purchasing a home, and I believe we locked him in at 3.125, and there were not any points associated with that. If it's a $400,000 loan and he wanted to get the rate to 2.875, well, he may have to spend, $4,000 or $4,500 to buy that rate down. Typically, you pay a half a point for 1/8% lower in rate. If you're buying a house, you've got young children, and you're going to be in that house for the next 15 years because they're going to go to, within the school district and elementary, high school and stuff, it can make sense to pay points. We deal with a lot of military personnel who are going to be here for 4 or 5 years. It doesn't make any sense to pay points because you don't get that money back. Typically, it's anywhere from 4 to 6 years, depending on whether you're paying, how much you're paying to recoup that, and then you get the benefit. So, yeah.
Well, Dave, thank you so much for spending time today.
Yeah, I enjoyed it.
We will talk about other topics later.
Well, I hope so. Everybody out there, stay safe.
Okay. Thanks, Dave.
Thanks, Joe.
I hope you found that information useful. Dave is such a great guy, very knowledgeable, and he really is about helping people. So let me recap just a couple things Dave said. Number one, the pre-approval process takes about 3 days. And Dave goes by the 2-2-2 rule, which is 2 pay period pay stubs, 2 months of bank statements, and 2 years of tax returns. Okay? Now, let me talk to you about the pre-approval letter from a realtor side. Number one, there are some real estate agents who will not show any houses to potential buyers until they have a pre-approval letter. The agent does not want to show the potential buyers homes in a price range that they won't be approved for. So they are protecting their time and the time of the potential buyer. Recently, I had an experience where a buyer that I'm working with wanted to see a house. So I contacted the listing agent, and the agent needed a copy of the pre-approval letter even before she showed the house. So there are now families that do not want to open their house for showings until they know the potential buyer has been approved and can afford the house at that price. I hope you found this information useful. Again, in the show notes below, I have the contact information for Dave Donaldson. Be sure to go to my website, joebrownc21.com. At my website, you can send me an email if you have any questions about buying or selling a home. On my website, too, you can search for homes, and there's also links to my blog. I enjoyed sharing this information with you. I get stoked about sharing this information with you because South Tampa, Florida living is awesome.